We're going to start today by looking at the S&P 500. Okay, this is from Yahoo Finance. You can see that we've the S&P is above all of the moving averages, the 50, 100, 200-day moving average. We're hugging the 50-day moving average right now. However, what's happening in the stock market is we have a little bit of uncertainty creeping into the market with the new election. We're going to keep our eye on this 150-day moving average. This has been major support in market crisis times in the past couple years. So in any major crisis, we're going to look at that as a major form of support. And where the stochastics are overbought right now, we're starting to go down. Our pattern is, as the stock market corrects, and this is an example of when to buy, when the stochastics are down and we're approaching a moving average, and it's at the low end of our range that we're looking for in our channel. So for instance, right here in our channel, we have a combination of being oversold and near a point of support. Okay, so we're going to look for the stock market to correct down here over some period of time, and that's going to be when we're starting to look for things to buy. We're overbought right now, so that's why I have on our calendar for this week, I have, let's see, let's look at our calendar for this week. I have caution because we're overbought, and a lot of times when the stock market's overbought, you have a tendency to go down a little bit. We have NVIDIA earnings coming out on Wednesday. That's going to move the market up or down a lot. And so we are approaching a time when we have three major holidays in a short period of time. We have Thanksgiving coming up next week. We have Christmas, of course, and New Year's. So a lot of times people feel good around those times, and that's why I have green around those holidays. And I expect the stock market to go up then. All right, and that's all we have to say for our calendar. We were actually down 2.5% in the last week. As you can see from our calendar, we were totally overbought last week, and we had caution in our weekly time frame. So we're down 2.5%. We had a lot of people afraid of any changes that might be made with the new administration. And that freaked a lot of people out and made people fearful that perhaps a Trump administration might introduce uncertainty. I'll speak more about that later on, but the stock market in general likes certainty. It likes things the same. It doesn't like when laws change. And what we had in the election is we had a Republican sweep of Congress. So there's going to be laws passed, good or bad, and that's going to change how companies operate and how profitable they are. So that's why there's some caution in the stock market recently. All right, so let's look at some more of our talking points. The U.S. Treasuries were up this past week, up 3% for the 10-year, 2% for the 2-year. So in general, we know that when the Treasuries go up in yield, that's usually bad for the stock market because it makes it harder for companies to borrow money and to grow and to survive if you're one of those companies that borrow heavily. So we can see that 55% of the stocks in the S&P are above the 50-day moving average. We are losing momentum. Last week it was 65%. So it's very important to know that we're going from a bullish sentiment in the market to a neutral. And that usually um, ushers in lower prices in the near term. Um, so we're getting more certainty, with the after the elections about who's going to be president, so we can really know what's going on there. But as I mentioned 4 months ago, when we were considering Trump as a president, Trump is going to move markets daily with his off-the-cuff, crazy remarks, and Wall Street does not like that. Wall Street likes certainty. We had in the past week, Trump nominate some people for his cabinet positions that were very controversial, um, and causing the stock market to really react negatively. So it's going to be hard in the next 4 years to deal with that. So from this point forward, from the day Trump is sworn in, we're going to have 4 years of chaos in the stock market. So it's very important not to get too aggressive, because anything that worked in the past 4 years might not work in a new administration. Something to keep in mind. Okay, so we're approaching November, December timeline. We're actually in the middle of November. It's one of the best months of the year. So um, so far it's been good. We've had a Trump rally. We have December to look forward to also. So that's why I have the calendar as green for most of November and December. And of course, I told you about the S&P already. S&P is overbought going down. So you can see we hit the top of this super reliable chart, and we're starting to go down. We're overbought in our stochastics, and we're starting to go down. So the combination of those two usually mean it's a cautionary approach right now. You don't want to get too over your skis, because um, good news might just be turned, the stock market just might turn good news into bad news, and just for the sake of revisiting the bottom of this channel. So you can see that the 10-year Treasury is going up lockstep with the S&P, which is very unusual compared to the last 5 years. So the higher the Treasury goes right now, the higher the stock market goes. Okay, so something very interesting happened this week. We had 4%, or around a 6% decline in the price of oil. And why would you say that would happen? It could be because the oil market in general, I think, is smarter than the stock market. So if you have the price of oil going down, there's a very good chance of maybe the market anticipating more production being made. So the new administration is going to drill and give permits easier so that oil can expand production in America, and that will reduce the price of oil. So perhaps that's one reason why the price of oil is down. Another reason could be the economy could be slowing. Um, so if the oil market is kind of thinking the global economy is going to go into some kind of slowdown or maybe a recession, the price of oil will go down a lot more. So we don't know what that is. Oil market is very hard to understand. The interesting thing we saw this week also is the dollar index was up 2%. So the dollar is appreciating. You can see the how much it appreciated in the last 2 months, last month and a half. That's a lot. And we have a formula. The stronger US dollar tends to drive gold prices lower, because the gold is priced in US dollar terms in most trading places. So gold is actually down. So that matched up this week. So dollars up, strong US dollar leads to drive gold prices lower. So it looks like gold is kind of out of favor right now. And it's been going down since the Trump trade. And that also might be because the market is anticipating a very robust economy, and we might be kind of growing ourselves out of our debt if everything works out perfectly. And if that happens, there will be less demand for gold. So let's watch that. It's always good to know. Um, see what else. Okay, fear and greed index. You can see that we're neutral now. It was greed, and we were up to extreme greed before, but now we're back down to neutral. So neutral are there's no action to take. So you can see it kind of matches our stochastics for the S&P. You can see that we're approaching like halfway here in the stochastics is neutral. Halfway here is kind of neutral. So when we're losing momentum and the stocks are going down, in the near term, I guess that corresponds with kind of people losing a bullish stance in the stock market. Um, let's look at the AAII survey. They're still bullish. They've been bullish for the last year. So I don't know if we can get much from this. If you're bullish, you can't do what everyone else is doing, and you got to be contrarian. We'll talk about some contrarian hedge fund activity later on today. Yeah, later on in our talk. Um, the VIX is still at a really low rate. If you can see the VIX for the past year, it's basically hovering at like a low for the last year. That means people aren't afraid, and people are they're not afraid of a crash or anything bad happening near term. Okay, so I would say in our emotional graph, people are starting to get enthusiastic about the stock market. We're not delusional or greedy yet. We're kind of interested. We're not fearful. So right now on TV, people are just cautiously approaching the stock market until the NVIDIA earnings on Wednesday. Um, so right now people are enthusiastic, but they're not over the top. And things that might lead to a crash. We always keep track of these things. We had one little canary in the coal mine for the AI trade. We had Supermicro. They were threatened to be delisted. This is NVIDIA's third largest customer. And if they're trying to get their financials in order by Monday, and if they meet that, then the stock will skyrocket. Otherwise, that could be maybe the first shoe to drop in a unraveling of NVIDIA and other major AI plays. We don't know, but all it takes is one. If there's accounting irregularity one place, there might be accounting irregularity other places. So we have to keep our eyes on that, and that might take the market lower. We don't know. Um, all right, so all right, let's look at some of our other talking points. We know that the PE ratio for the stock market, the S&P, is 25.65. The average is 15. So I guess right now we do have a stronger stock market than most other times that we've seen in the last 20 years. That could be the reason why we pay a little bit more now. But don't be surprised that the PE gets down to 15, um, which is the 20-year average. Right, so let me see. Okay, we always go with the first to worst. You can see utilities, which were worst last year, are now one of the best, third best. And we have the energy sector is one sector that is lagging. It's one of the worst this year. I think with Trump's choice of an energy secretary and with some of the other things that are going into um, America First policy, we're going to have a lot of activity in energy. And for it to be down last year and be one of the worst performing this year, that could be the next contrarian play for the next year. We've had healthcare. It's still um, doing bad, even though it was down 1% last year. Healthcare is under fire this week because JFK, John F. Kennedy, was nominated for a we'll go over that later on today for the chief medical position for Trump's cabinet. That is that made all the stocks in the healthcare sector tank this week. So, and look at this, financials, 32%, which was um, last year they were only up 3%, 9%. So, but we still have the IT sector outperforming this year. So we did have a losers of last year will be winners of this year. That's basically true. But the winners of last year are winners of this year. All right. So let's look at some of our sector market moving events right now. So we see the market movers. We have Palantir, the AI company, up 11%. We have Supermicro up 3%. Okay, so we have some AI companies. A good half of these are AI related. We have AEP, which is Vistra. They are data center or electricity related. We have, okay, what else do we have? Okay, so we have some AI companies in the top stocks. And the bottom level, we have a lot of the stocks that were affected by the choice of Kennedy as the um, lead medical person for Trump's cabinet. So now we have a lot of the companies that are relying on drugs and vaccines really tanking because there could be a lack of approval for certain drugs, and there's an unknown there. So uncertainty is really overtaking that industry, that sector now. And we also have a continuation of stocks that are going down because of the environmental jobs. So the Democrats used to do a lot for the environment, such as solar and um, wind and et cetera. But now we see they're unwinding because there's not going to be as much support. We have Enphase Energy. They put solar panels on houses. We have, you see, other stocks here. We have West Pharmaceutical Services. We have Biotechnique. We have Lamb Wesson. Lamb Wesson is a company that does French fries. So if there's this new person in charge of the dietary decisions for America, opposed to junk food and trying to improve the standards of quality of food, then the stocks involved with that, such as Lamb Weston, they sell French fries. You have Monster Beverage. They might have to change their formula for Monster drinks, or people might not buy as many of those. So there's fear gripping this top decliners is all about the choice of the medical lead for the country. We'll go over that later on today. Let's look at some of the sectors going up and down. Okay, we have the biotech ETF down a lot, and let's go over that right now because the trade today is really affected by. Hold on, I'll go to that right now. Okay, Robert F. Kennedy Jr., Health and Human Services Secretary. So he's an environmental lawyer. Kennedy doesn't know anything. Well, he isn't trained, he isn't schooled to be a human health director. And so there's a lot of people say that he might not even be confirmed. He has no medical or public health degree. He is a vocal vaccine skeptic and critic of the CDC. So we have a person who can radically change the way drugs are approved and distributed or um, the way vaccines are purchased by the government. So this is really affecting a lot of the stocks that are going down today. So let's look again at this top 10. So let's look at the 10-year first. We always do this exercise before we do our sectors. Okay, the 10-year Treasury yield went up today. So we have to look at our formula. Okay. Okay, so the yields of the 10-year are going up. Positive for large cap tech stocks, financial, insurance, brokerage, insurers. Negative for small cap, high yielding home builders. Let's see if that is what happened today in our sectors. So we have the yields going up. That's bad for biotech. Yes, it went down 4% today. So biotech went down 4. So we have any company that needs to borrow money is going to have a harder time whenever the yields are going up. The semiconductor, um, technology went down as the yields went up. We have healthcare going down. They have a yield, so we expected um, negative for high yielding stocks, healthcare. Okay, biotech. So let's see, telecom. So high yielding stocks and telecom is a high yielding stocks. Okay, so that went up. That is going the right way as we expected. Um, Oil goes up based on the price of oil. That's just the way it is. And potentially, if the America has more deregulation and more oil is drilled and there's more permits given, then the price of oil goes down. And so the profitability of oil stocks go down too if the price of oil goes down. Let's look at the retail ETF, the home construction ETF. Okay. So we've gotten this far right here. Home construction, negative for home builders. So as the 10-year goes up, home builders will have less demand because the cost of mortgage payments go up. And let's look at the stocks going up the most. Utilities, um, that's unexpected. Usually utilities go down when the yields go up, but that's fine. Let's look at the financial sector is going up. So yields going up is good for the financial sector. So the financials are going up as expected. So we're just doing this exercise just to show the one-to-one correlation to yields to different sectors. So if your stock goes down, the first thing you look for is the yield of the 10-year, and then you can get a little bit of the reading of, in general, that sector based on the yield. Let's look at the real estate. So negative for home builders or real estate. And we have the bank ETF. And we expected that to do better in real estate. Okay. All right. So we had a one-to-one correlation. That was a good exercise to go through. Let's look at some of our talking points. Okay. We have Dan Now's, his picks from the beginning of the year. They've gone down a little bit in the last week. Amazon's still up 33%, and Meta's up 56%, and Text Instruments up 21%. XBI and XBI is up 3%, and KWeb, the Chinese ETF, is up 27%. So far, his picks have been stellar this year. I pulled out a couple of charts that of interest. You know, I go through the stochastics every week for all the stocks and sectors we're following. But every once in a while, we have a sector that's out of favor and it's oversold. And you can see as the dollar has gone up, the gold has gone down to the bottom of its range. So you can see it's oversold also. So this has been pretty steady going up for at least a year now. So this will be a time if you're interested in gold, this would be a good time to dollar cost into it. because it's at the bottom of its trading range and it's oversold. But it's in general, it's at the mercy of the US dollar. So if the dollar keeps going up, you're going to have the price of gold continue to go lower. Okay, so let's look at some more of our stocks that we're following. Okay, so we saw the XLE was in a downtrend for at least a half a year or since March of last year. But we did recently break out of that and we're starting an uptrend. And with the new administration, we're going to have some friendly policies towards the drillers and the oil producers. So this could be the new leader in the stock market. You can see we're starting to have new higher lows and higher highs. So this could be a new trend starting. And it's always good to mark these things at their turning points. We did so whenever last year, I remember we went through some of the sectors. We saw the utility sector break out. Let's look at the utility sector. XLY, XLB, XL, hold on, XLU. Okay, so we had up until February of last year, we had a downtrend in the stock market where we had lower highs, lower lows, and we saw right at this time, it started to break out. It started to go from from a downtrend to an uptrend. So I see that same thing right now in oil. And all we need is a Mideast conflict or a major event to happen in the Mideast or some kind of war to break out in a war in an oil producing country to for the price of oil to start going up. So we'll keep an eye on that XLE. And let's go back to our meeting notes. Okay, you can see AbbVie is a stock that's been in an uptrend for at least a year and a half. It fell on news that one of their drugs for schizophrenia did not pass some of the trials. So because of that, it went down to the bottom part of its trading range. You can see it's oversold and it's at the bottom of its trading range. So if you haven't invested in that stock, and another one problem with drug stocks right now are you have a administration that's kind of negative drug stocks. So you have possibility of Kennedy producing some kind of rules where you can't get as many drugs approved as before. We don't know, but I'm just noting like a prime time to buy stock if you're continuing this in an uptrend. And let's look at another one. We have Meta platforms. This is actually right in the middle of overbought and oversold. We're halfway between the overbought and oversold our trend lines. So this is kind of nowhere's land, for the stock, but we are in an uptrend. It'll probably go retest this bottom part of the channel, and by the end of the year, we'll probably be up here. But it's been the strongest stock we're following on our list. And they still have a lot of the same catalysts that they did before. They have innovative, they have an innovative CEO that's creating new products that are cool and being used by billions of people. I think they're over 1 billion or maybe 2 billion active users on their platforms every day. So if they get AI right, they're going to have another market for growth. So let's see. Okay, so this is what I would consider a headline for this week. 4 years of chaos is coming. You have to be starting today, realizing that things are going to get nuts. And every day we're going to be met with a random statement or some kind of monkey wrench thrown into a well-oiled engine. we started, this whole process of chaos by Trump nominating people that are very, um, they're going to make a lot of changes, perhaps. And markets do not like change. They like the same thing. We have this, the Congress right now, it's dominated by Republicans. They, they were actually, last time Trump was in office, there was a Republican Congress and they weren't able to do some of the things that he wanted. So whenever the market sells off on like maybe a nomination of Robert F. Kennedy Jr., um, realize that he might not be confirmed. In the past, these seats have been musical chairs. We don't know how long or if these anything's going to be done um, in these roles that are being given to Elon Musk and uh, other people. So we're going to have um, uncertainty in the Trump administration. So you can't be too aggressive. You gotta start being conservative now, realizing there could be big drops in some of the stocks we're following based on things that are rules that are put in place and by the new administration. We have things we have to worry about are the price of gas. We have to worry about food costs. Um, okay, let me. Hmm. Okay, so we have several things that we have to worry about for every one of the stocks that we're following. We have to realize how it's affected by possible deregulation. That's the first thing. Second thing is we're going to have a threat of 3 to 8 million immigrants deported. So that's going to affect food costs and it's going to really skew the labor market if it happens. We're going to have tariffs. Tariffs affect the input costs and good of the goods sold by companies. And for companies that are doing business overseas, like Procter and Gamble, there's going to be tariffs put on American products. So that's going to have like a lot of uncertainty when when stocks report their earnings or they give their estimates. So it's going to be harder for companies to operate in this kind of environment. And it's going to be harder for us to have a consistent stock market when rules are being changed every day. The only clear-cut winner in the new administration are financials because there's going to be deregulation. They're not going to have to store as much money for regulation purposes, and they're going to be able to invest that. So financials, that's why they're taking off recently. Um, so I put together a list of, the sectors and how they're affected in the Trump presidency. So first of all, utility sector, they're highly regulated right now, so they can't really grow that much. But if there is some kind of deregulation, that might help them increase their pricing and possibly make new power generations without as much paperwork. So that will help the utility sector. We already said that the financial sector is going to be a clear winner because there's going to be less rules for them to follow. And um, real estate sector, it seems as if there's going to be lower interest rates in a Trump administration because Trump's campaign policy and things he was saying is he wants to lower interest rates. So whether he does it directly or indirectly by some of his policies, um, there could be a chance where the real estate, I mean, the interest rates go down. But if his tariffs, if he does have 60% tariffs, that's going to be inflationary. So it's like putting your foot on the brake and then hitting the gas. I don't know how this is going to end up. For the energy sector, deregulation will produce more oil. That means oil companies will pump a lot more than they are now in the United States. But that'll reduce the price of oil on the markets. So it's supply and demand. So that's going to be deflationary, meaning oil is the biggest input cost of all in all products in America. So if the price of oil goes down, all the prices across the board for a lot of things go down too. The industrial sector, deregulation will help industries, the industrial sector build more and without the paperwork, basically. And so they'll grow faster. So that's good for the industrials. Materials, higher inflation, if you have higher tariffs, they'll make material prices higher and more profitable. So, see, consumer staples, it's going to be the effect of this sector is unknown because tariffs will cause just all kind of problems. Cancel. You don't know what things are worth. I mean, how much your product's going to cost to make, and you're going to be selling it for a different price than it used to overseas. So it's going to be very tricky. I think um, if you invest in stocks that are only American based, like Berkshire Hathaway, perhaps that's one way to um, get around a lot of these issues. Okay, so discretionary sector. If the economy does accelerate, and we will have a lot more discretionary purchases, so that'll help that sector. Um, the communications and IT sectors. Um, the top stocks in these sectors are all under scrutiny now for antitrust issues. And the new administration might stop those lawsuits against the big companies. So that would help that sector. And that's why a lot of those stocks rallied in the past, in the Trump trade in the last 2 weeks or so. In the healthcare, we already talked about this. Robert F. Kennedy Jr., being the head of a health department, that could throw the sector into chaos, especially the vaccine makers. So if the vaccine makers don't get any government money and are not promoted by the government, then there's a very good chance that they will be less profitable. All right, so that's very important to adapt to that environment. Every week we're going to be going over the chaos of the week, I think. All the rules, all the new things the Trump administration is going to be doing to put a monkey wrench in our perfect, well-oiled engine. We've had this perfect, expected, engine in the stock market for years. Um, we might be at a breaking point. I don't know. It might not be as predictable anymore, and the stock market just doesn't like uncertainty. Um, so let's see how that all pans out. Okay, here's some news stories that came out. Drug makers. In the past week, the drug makers went down between 10 and 30% or more, based on the news that Robert F. Kennedy Jr. is nominated to oversee the health department. Um, so it's interesting that Kennedy has like these baseless claims that vaccines aren't safe. He has all these unfounded beliefs about health, and fluoride in the water, and it's it's very it's going to make things very challenging for a lot of sectors, the health sectors, the food sectors, maybe the soda companies. A lot of companies are going to have to maybe adapt their business model around this, and it's change. And whenever there's change, the stock market doesn't want change. So you can see that packaged food manufacturers such as Pepsi and Coca-Cola, we had some our top 10 decliners, manufacturing of like Monster. What is it? We had our top 10 market mover, Monster Beverage, example of a stock that's greatly affected by this. We're going to see on a regular basis stocks going up and down based on these policies, potential people running the sectors. Um, so that's scary. There's another article, how the Trump trade tariffs on Taiwan chips could hurt the AI trade. Oh my. So if there are tariffs placed on Taiwan chips, Apple has a lot of their chips coming from Taiwan Semiconductor. You have every major AI trade using chips from Taiwan Semiconductor. That's going to totally change the costs to do business for a lot of the big tech stocks. So we don't know how that's going to pan out, but it's any kind of uncertainty um, will cause stocks to go down. Um, so also Trump is he is against the CHIPS Act. So all the money that was given to Intel to make a foundry in America might be taken away. So this is basically changing the rules, the way the companies operate. IBM CEO thinks the less regulation, more innovation theme is good for business. So we're just going to have to see what companies adapt best to this new environment. As we mentioned in our meeting notes, on this Wednesday, we're going to have NVIDIA come out with earnings. So the important thing for NVIDIA is um, the CEO has been saying that there's insane demand for their chips. They're limited, their sales are limited to how much they can produce. That could be the only thing that I can think of to make their stock go down if they weren't able to produce enough to sell. But in the next week, we're going to have Walmart report on Tuesday. We're going to have Palo Alto Networks on Wednesday. And that's basically the end of the reporting for this quarter. So we'll see what happens on those earnings, but definitely NVIDIA earnings. If they're good, stock market goes up. If they're bad, stock market goes down. And it could be a buy on rumor, sell on the news. So if the stock rallies into Wednesday, then it'll probably go down afterwards, even if the earnings are good. Okay, I did a stock screen and I sorted by market cap. And you can see um, I'm gonna I'm gonna go over two of these stocks we never went through before. Um, App11, they're a stock. App11 is a company that basically helps apps advertise, and they're growing supposedly at like 100% rate here, this 3 to 5 years growth rate. So I thought it'd be interesting to go over that. They're a smaller company, but they're still 100 billion in size. We're going to go with Coinbase again because we had a we had a new catalyst for Coinbase. The price of Bitcoin has gone up 16% this week alone. So there might be a lot of people that might be interested in this that weren't interested before. So let's look at those two right now. App11, they're on $300 a share right now. You can see that they were super money losing for at least the 22 to half of 23. But they found a niche right now in what they're doing, and you can see they're growing. I calculated their growth rate. So from last year to this year, they're growing 406%. And then they're growing 43%, 32%, and 19% estimates for 26 to 27. So on average, I would say they're growing at 43%. Their PE right now is 43. So they're basically fairly valued at a PEG ratio of 1. Let's look at some of their other financials. Okay, their market cap is 100 billion. Okay, and they have around 500 million in cash. No, they have total debt of 3 billion, 3.8 billion, and they have total cash of 0.5 billion. So they have a total of about 3 billion in debt out of 100 billion market cap. That is very reasonable. I wouldn't worry about that at all. The return on equity is 10 times what we normally look for in a company. And that's really good. And profit margin is double what our minimum is. So they have really good fundamentals. And they do have a 5% of their shares short. So it's interesting that any news, really good news, could be exaggerated, go up a lot if there's a short covering. Let's look at, okay, so right now it's fairly valued. This is kind of stock that I would watch and buy during a sell-off because um, it's not really undervalued right now. I wait for stocks to be like on sale for a margin of safety. And for it to be on sale, the peg ratio will have to be less than one. All right. And let's look at Coinbase. We looked at this before, but I thought it'd be interesting to look at it now, seeing that a lot of the cryptocurrency markets are excited. You have this period of time in the last since 22 to 24 where we had negative earnings, and you, you can see they grew from last year to this year an amazing 1,300%. And but for the next couple of years, the estimates are still in the downtrend. So they're earning $5 a share this year and $3.77 next year and $3. So it doesn't make sense to really buy this right now. Their forward projections aren't that great. I guess the good thing about this company is they have let me see, they have 7 billion in cash, 4.4 in debt. So 3.5 in cash right now, billion. And their market is 776 billion. So the forward PE is 81. See, 81? Forward PE is 81. So I actually did a miscalculation. So Yahoo Finance thinks its PEG ratio is 1. So they think it's growing at 80% right now. So for me, it's not that interesting because if it's just fairly valued as a high PE, I like to buy a PE ratio when it's at least less than 30. If it's or a PEG ratio like maybe zero point 0.5 or 0.7, 0.8. But it seems like a little expensive to me right now. But that was a good exercise to go through. Um, this is a week when 13Fs are filed. 13F is a document that's filed for all companies with over 100 million, I think, in assets. So every mutual fund, every hedge fund that manages over $100 million has to report what their top holdings are. So I thought it'd be interesting to go over some of the largest hedge funds and what they're holding and why they're holding it. So let's see. We have Bill and Melinda Gates Foundation Trust. Of course, Microsoft's the top holding because Bill Gates donated this to start with. So it has nothing to do with, um, well, we're going to ignore that for now. Berkshire Hathaway is a top holding. Um, Waste Management. So we can see from here, these are very conservative companies with a consistent demand through good times and bad. So if you see Waste Management, you're not going to, whether it's a good economy or a bad economy, families are still going to produce the same amount of trash. If you have a really good economy, you might be building more and having more industrial waste. But in general, companies like Waste Management are still going to be consistent over time, the amount of money they make. Canadian Railway, this is an example of a monopoly. There's not too many companies that have direct routes from America to Canada. And we have Caterpillar and Deere. These are industrial stocks. They make the tractors. I'm not sure why they would have that. Um, not sure. Uh, Walmart, an example of a stock that has done really good so far this year. They pay a dividend of like 1 or 2%. And in bad times, whenever there's a recession or people are holding back with their money, they will attract some of the people trying to save money that are usually spending at Target or Nordstrom or somewhere. So Walmart, these are examples in this portfolio of stocks that do good in bad times and good times. We have Coca-Cola FISMA, they do bottling for Coca-Cola. Waste Connections, another waste company. Um, we have Crown Castle International. I think they make cans for food, bottles for like soda. So they have a constant demand in good and bad times. So this is a very conservative portfolio. Um, they're saying that the Madison Square Garden Sports Corp, their assets are worth more than, what they're currently trading at. So there's a lot of Kraft Heinz is a food company, Hormel food company. Okay, so we have a very conservative. This is for like a long term, maybe 5 to 10% total return growth portfolio. So go to the next hedge fund. It's called Glenn Greenberg from the Brave Warrior Advisors. We have in the top holdings, and there's something interesting about this portfolio is we have a contrarian picks. A lot of these were out of favor all of this year, but you can see that Discover Finance, we have a lot of financial companies in this top 10. You can see that Fidelity, we have um, Apollo, they lend money to businesses for investing. We have D.R. Horton. This is a housing company. So there's a lot of the sectors that are out of favor now that this company, this hedge fund is actually accumulating. So maybe we can learn something about that as we put together our portfolios. Like right now, the best stocks, performing stocks are the AI stocks. You don't see any AI stocks in this guy's portfolio. They're totally contrarian. You have Bank of America and JP Morgan. They are just starting to break out now. And he's owned that for a while. And we have, um, okay, you have Texas Instruments, an example of a stock that um, Dan Now's highlighted as outperforming for 3 years, and they're bound to perform again this year. So this is a really good example of a contrarian portfolio. If we look at our first to worst, what this portfolio is doing is they're trying to choose some of the stocks that were in the worst, and knowing that we're basically approaching a different cycle, and possibly see he had financials and healthcare. Perhaps he's doing a contrary method for his portfolio. So let's look at, okay, let's look at the next hedge fund slash portfolio. We have Berkshire Hathaway, Warren Buffett. So this is for the period of Q3 of 2024. Apple is still one of the biggest holdings of his portfolio, but he reduced it by another 25%. So, so it's still 25% of his portfolio. It was half of his portfolio, but now he's reduced it. But you can see banks are some of the biggest holdings, his biggest holdings. He's always held banks as a large part of his portfolio. But he reduced his Bank of America by 22%. He's been selling a great deal of his portfolio to um, develop a cash position. So maybe he's anticipating the stock market falling out of favor in the next half a year to a year. And um, so there's a lot of wondering why he would do that, but maybe it's because there's a 5% yield in the 10-year that's favorable for his cash position. Um, but there's some people that say this reduction is because of the potential of higher capital gains rates in the future. We don't know that, but it could be good portfolio management. If half your portfolio is in one stock, like Apple was half a year ago, maybe reducing it by half is reducing your risk in long term. So you can see that Buffett, half of his no, 30% of his portfolio are bank stocks, Citigroup, and insurers, Chubb, We have Bank of America and American Express. So these are stocks that in 10 years, 20 years, people are still going to need to borrow money. Warren Buffett thinks 10, 20 years from now, and people are still going to need gas. And these are all long-term holds for him. So we have Visa, MasterCard, financial companies. So I would say a good 30 or 40% of his portfolio is financials. We have Ally Financial. We have, okay. So, so I guess he is kind of contrarian. He's selling the tech stocks when they're the highest performing, and he's selling his Bank of America probably because it was a large position. But let's look at some other um, hedge funds. Viking Global Investors. They have a $27 billion investment portfolio, so they're not chump change. Let's look at their holdings. USB, US Bancorp. He added to that. He added to a little bit to Apple. He reduced his Philip Morris. Okay, so let's look at his top holdings regardless of what is reducing it. He's reducing Amazon by 50%. So this hedge fund is actually reducing some of the big tech winners. So okay, and what is he buying? He's added to the banking sector. He might think that the new administration might help the banks. Let's see. Visa is it financial? So the financial sector has kind of been out of favor. So he's starting to buy that. And Fortive, they do cybersecurity. So and JP Morgan, a financial, he added 22% to that. So he is doing the opposite of what everyone else is doing. This hedge fund, he's buying the sectors that are out of favor. He's selling a lot of the sectors like Microsoft that are in favor. So those are really good examples of how to manage your portfolio and um, adapt to changing times. Okay, let's look at one more. This is David Tepper. He went on CNBC like a month ago, and he was saying how he's going all in for this Chinese trade. And so he's down 20% on his position since he reported it. So it's very interesting to see if he's going to be right or wrong with this because Trump administration is not going to be nice to the Chinese. Last time they set so many rules and tariffs that it was very difficult for Chinese companies to thrive in that environment. So that's a pretty big risk. 25% in the top two Chinese stocks. He has more, JD, which is Chinese. He added a lot to it. So he added 173% to this one. That's the Temu, uh, they own Temu. So he's definitely all in China. I guess maybe 40% of his portfolio now or more is in China companies. Baidu, KWeb. Okay, so this is dominated by maybe half of his portfolio is in Chinese companies. And he's reducing all of his big tech stocks also. So Taiwan Semiconductor, NVIDIA, and all of his big tech stocks he's reducing. Look at that. Meta reduced 33%, Google, Amazon, Microsoft. Okay. So we have a lot of the major hedge funds are starting to rotate out of the sector, tech sector, which has performed the best the last couple of years. And they're going into unliked unlike sectors. All right. That was a little good exercise. It's always good to do that every now and then, every quarter, whenever the new hedge funds come out with their um, new holdings. I hope you enjoyed that. I hope you have a really good week next week in the stock market. And if you have any questions, let me know and I'll try to help. All right. We'll see you all next time.